Check, check, radio check. Want to thank everybody to this week's call, Chat with Chris. Before we get started, if somebody wouldn't mind typing in the chat that you can see me, see my screen, and we don't have any technical difficulties. So thank you. Let's see, Kate, Harold, thank you very much. All right, so you've been on this call before, but I think it goes without saying that there has been some volatility in the last month. And remember, although this says April, we're not through April yet. So really, these slides are going to sort of a rear view mirror approach of where we've been for the last 2 or 3 months since the year started, and how March actually ended up and where does money seem to be going? And then obviously next month we'll have a lot to talk about. And then even with today, right? So there's a lot of balls in the air. There's a lot of things that we could point to. But what I want you to understand that when we think about investing, before I get into equities or bonds, these are strategies. Typically, when we're projecting out into the future, we need to have the goggles or see through the lenses of long term, right? And I've had calls on here in the past, sequence of return or averages lie. This is where we get so myopic in our sort of our viewpoint that we're looking at the immediate moment, and it's hard to detach and say, really, how does this affect our overall plan? So, I take a lot of comfort in knowing that, I did have a couple clients that reached out to me. One was a relatively new client. And it gave me great comfort because when they onboarded with me, basically at the end of last year, beginning of this year, they went from an area where, their concerns were low fees and they were in Vanguard and they were but they had an above average amount of risk. So after onboarding and after diversifying and going through strategies that were risk appropriate for them, um, when we discussed and talked, and we ultimately talked last night, their portfolio was only down about 1.75, right? 1 and 3 quarters. And, although nobody wants to be down compared to what the media was touting and what just happened last week, even last week when I was looking at it, they were down about 4, and then it had since recovered. My point is that when we're investing long term. If we need funds available immediately, typically we're going to put that in some type of money market account or something that doesn't have the whipsaw approach. The indexes that we're looking here, and again for the month, you can see March was a tough month, and it's starting to look like, hey, Europe and emerging markets were safe havens, and obviously commodities was a hot pink, right? That won the day. But as we look at year to date, right, we can see that the powder blue Europe, right, which is benefiting from some of the talks right now. So again, I'm trying to stay neutral here politically. I've talked about and where we're at, whether you agree or disagree with where tariffs are at right now. What I think is happening from my personal opinion and based on what I've read and what I'm listening to in research, the tariffs are we're in debt, right? I just did a workshop on Saturday and I was showing the slide, the US debt clock from last year in October just to this year, and how it went from $35 trillion of debt to $37 trillion of debt in just a few months. And what I'm saying is this is unsustainable. But if you go to that now, usdebtclock.org, they actually have a Doge component, a Department of Government Efficiency. And what they're finding is this waste, fraud, and abuse, right? Politics aside, that is now being recaptured for us as taxpayer to sort of have these leaks in the bucket that are our federal government right now, and starting to plug those as best as they can. So as these things get negotiated, right? So the U.S. is currently in talks with Japan right now, and I think the markets are waiting right now with bated breath as to how that'll turn out. Absolutely, without a doubt. Now, I'm absolutely convinced, that China has been ripping us off for a long time, and I think that that will be something that will ultimately figure itself out. But everybody else does seem to be willing to say, "Hey, all we're saying right now is that there needs to be a reset. The rules that were in place, sometimes some of these trade policies were decades. I mean, you're talking 30, 40, 50 years that they were implemented years ago. And then now they're not, basically to the American, taxpayer and the American citizens, sort of detriment that they are now what we're seeing here is that what we're trying to bring manufacturing back. It's not going to happen overnight, obviously. And I think in the past, the US was known for for industrial revolution. I think there is a race for AI and tech. And if we can secure negotiations, and Russia being one of them, Ukraine being the other, for precious metals and minerals, to create and have some of these resources so that we can start to build here and lead that next generation of revolution, which I think will be robotics, AI, technology. That's all promising. What does that have to do with today? It just means that right now we're not there yet. We did extremely well last year. You've heard me talk about it, bet on the US. There's nothing in the forecast that causes me pause, except I did see United Healthcare down right now. And they miss their marks. And as we go through sector rotations and you start to see, sell-offs, and you start to see, everybody's pointing the finger at the immediate moment. The whole purpose and the reason I do these slides is to take a breath and a step away from what's going on right now. Let's just look at where we came from. And so as I start to look at and we say, hey, what is prudent in the world of financial planning? And that is diversification. So if you're still working, if you don't need the money, right? You basically, none of my clients, I'm letting you know, nobody have I given any advice to either A, sell, or B, sit on the sideline. We are still in the wait and see what happens. The correction or the downward pressure that we were seeing for my clients have been, very, very light. However, there's still an element where you will see, and remember, I was just talking to a client last night. The government or the media relies on two things: fear and greed. And that's what we're seeing for right now for April. But for March, I think it was like, hey, now we're going to have these tariffs. And it's like, whatever the headlines are, and what's the ultimately going to be the end result? And nobody really knows right now. But I do have confidence that, to me, what was the option? I do know that the spending is unsustainable, that the amount of money going out, that we have continued to really outsource our jobs, our manufacturing plants. We've done everything in the spirit of globalization and cheaper costs. But you got to understand, places like China, right, don't have rules and regulations on slave labor, on child labor, on product quality, on the economy, right? They just basically don't care. India is very much the same way. They are one of the world's greatest polluters, and yet, as we champion a cause to our own detriment, it really is not a fair playing field if we're not all playing by the same rules. And I think that's all that the current administration is trying to do. Again, politics aside, just make it fair for everybody. And I don't think that there's, you really can have a problem with that. But will you see downward pressure in your 401ks? Yes. Your IRAs? Yes. But as we're looking at it, if you don't need the money right now and you feel that you were diversified before this happened, then I think that we're okay with saying, hey, listen, this is going to be a short-term pain, maybe 6 months, maybe a year. So we've had a couple good years. and we needed it to come back, and now we dump money in, and now we get the growth of that. So that's my professional opinion on the sideline. And then again, you see we've had a red line, and you're seeing that the relative strength index, we are having sell off. But again, losses are only experienced if you actually sell. If you say, I can't stomach anymore, and again, that was what I'm finding quite often as well. People are approaching 60, 65 and are taking way too much risk. Like the client I just picked up, had they been doing this on themselves and continued down their path, then yes, then the conversation would have been very different amongst themselves, because they wouldn't be talking to me. They were sort of managing it themselves. An advisor at Vanguard that was, oh yes, just do this, and next thing you know, the market corrects 14, 15% for 63-year-olds, on $1 million portfolio. To lose that kind of money is significant, right? So that's what we try and caution against. That's where, again, you will hear me say this till I die. That is that we need to be diversified. We need to be have strategies in place. And a core part of that is having those fundamental floor components. And part of that, as we enter into retirement, is Social Security. It is if you have a pension, or maybe you have something in asset-based pension as well. So any of these things, before you get into the markets and all these things, you can accomplish a lot of what you're trying to do just with proper planning. Now, when we're into the income portfolios or the income strategies, again, everything is just feeling pressure. Jerome Powell, President Trump don't seem to be hitting it off. He's going to continue to take, when I say he, I mean Jerome Powell, are going to continue to take a wait and see approach. When we look at the whole year, I mean, yields on bonds right now, even the purples, which are the 20-year treasuries, which is typically a flight to safety, right? This is where if we needed revenue, and I think that we will continue to see that. I just looked up 30-year mortgage rates right now for April at 6.83%. So what does that mean? Well, if banks are lending to the retail consumers almost to 7% right now, just long term, that's probably not desirable. So you will start to see a desire, or maybe an emphasis by whether it be by the administration or by the markets, that say, hey, look, we need to come down. But there's still people buying properties, so there is that element. And if we're investing in bonds as part of our portfolios, in the past, they've not been the favored investment strategy. But now there is something to be said. Short terms are probably about 3.5%. I think 10 years are about a little bit over at 4.3. So, having some exposure to bonds in your portfolio, if you need income off that, that's where these things make sense. But overall, the bonds have a green light. And that is, whereas before, when I used to talk about these back in all through COVID, I had red lines, right? I was very cautious because of this big dip here. We were coming off this bond curve. But it looks like we're having a sideways channel here, which means that over time, we will see some recovery in the bond market. So that's healthy for the economy. And then lastly, just for March, I don't have the data for April yet. We'll see next month. Remember, 50% is the middle. And if we have a 50% and we're below that, that means that there is nothing that is screaming recession right now. Once we get over 50%, like we were seeing at the end of 2024, right, that there could be some concern. But it seems like that concern has sort of waned. And now we are at a point where, we're sort of just trying to figure this out. There's still pressure, right? There's a lot of, I would say, difference of opinion on some of what the current administration is trying to accomplish, how they're going to go about it. But again, it's the same thing whether you watch football or baseball. It's what I call Monday day quarterback. All I know is that we are at $37 trillion of debt as a country. It's unsustainable. So we have to address it. I think that this is the only person I've seen make an honest attempt at trying to get things back in check, find things, shine the spotlight. And what I always find amazing, don't look at the man, look at the problem. And let's see what solution has been offered in the past and who's benefiting from it from a monetary standpoint. I always say follow the money. Who's getting paid by taking the position that they object to that solution? Because that's typically the person that is typically going to say, hey, you know what? I don't like it. I don't think we should do that. That's not fair. Oh, really? Okay. A, what was your idea? B, why didn't we do that before? And C, how are you being paid right now? And when you start to ask those really, I think, valid questions, you can start to come to your own conclusion that they may have a vested interest. I call those lobbyists to take that position because it's protecting their revenue. So, or their base. But again, I try not to get political when I talk to it, but it does overlap. So like I said, I just did the 12th. It was a rainy day. We had a good turnout. I had a lot of fun doing it, and I love helping people. The next one is Saturday, and the weather is looking at, I think we might have like sunny, and I mean, you could have not asked for a more polar opposite day weather prediction. So I hope you can make it. I think we have a few seats left. If you'd like to attend, let us know. And again, nothing sold at this event. It's purely educational. But what we're trying to help you to understand is as you approach retirement, right? It's not just about the investment. It's not just about, hey, listen, when do I turn on Social Security? You have to get all these pieces correct and connected so that you can connect the dots and be as most efficient as you can. The other thing I want to wish everybody, I'm not afraid to say it, happy Easter or happy Passover, whatever applies, right? But from our family to yours, we want to make sure that you have a wonderful and safe holiday. And if there's anything that we can help you with, please let us know. So without, this is our disclosure. But again, I want to thank each and every one of you for taking time out of your day to listen to my thoughts and opinions, and hopefully you continue to find value. Have a great day.